Well, hello and welcome to this Moneycontrol live stream. You're watching Morning Trade with me, Nandita Khemka. Well, over the next 30 minutes, we'll be talking about the global markets, the cues for trade, and of course, the stunning exit at TCS. And of course, we'll also be getting all your stock-related queries answered by our expert on the show. So if you have any stock queries, comment on our live feed and we'll have them addressed by our expert. But before we do all that, let's take a look at the top headlines at this hour. Well, relief rally on Wall Street after a group of banks pledged $30 billion in deposits for First Republic Bank in a bid to contain the banking crisis. Meanwhile, ECB hikes raised by 50 basis points as planned, despite the turmoil in the banking sector. The central bank also says that it is keeping an eye on current market tensions and pledges liquidity support for banks if required. Asian markets opened with a gap up on the back of strong handover from Wall Street. HDFC Nifty is also indicating a very strong start for the Indian markets. Meanwhile, oil prices have snapped three-day losing streak. In fact, prices gained on reports of a meeting between Saudi Arabia and Russia to discuss measures to bring about stability in the crude market. And the big news today, change at the helm of TCS. Rajesh Gopinathan resigns as MD and CEO. K. Krithivasan, who was president of the BFSI division, will be taking over as the new CEO. Well, we will be talking about the cues for trade, but first up, the big resignation that has come in last night, it's something that has stunned, market experts, and in fact, it is something that the markets had no whiff about. So, let's talk about what this resignation would mean for TCS at a time when, the environment is really tough for IT stocks. Let's go across to our senior consulting editor, N. Mahalakshmi, to discuss what this move, in fact, what this change at the L means for TCS. Well, good morning, ML. Thanks a lot for taking out time and joining us. Nobody had a whiff that this was coming, and the fact that, CEO designate was also in the, the company was already ready with the CEO designate. What does it say about this whole situation?
No, obviously it's a surprise, Nandita. Nobody had a whiff of it. Of course, I'm sure these things take time and it would have been discussed informally and then they have figured out who should be the next person. But it is surprising more so because Rajesh Gopinathan had another 4 years to go. He just got an extension in 2022.
Right.
He had time till 2027. It's just 6 years at such a large company. So one wasn't expecting, and that too, announcing a top exit at a time when the financial crisis is just beginning to show up, and for the past 3 quarters we've been talking about a US recession which has not happened. But now, as we get into this, fragility of looking at the fragility of the US financial space, obviously there is, it looks like a recession will be inescapable. And therefore, how does the IT sector really pan out from here? Obviously, an experienced leadership hand will come handy, and you need all hands on the deck to navigate a situation like that. It is a surprise. It is a bit of a jolt, but I think we should not, while we should not undermine the importance of leadership, we shouldn't overemphasize it also. TCS's top management has been in place, and this new person who is coming on board is also a long-term veteran. Also, he has helmed the BFSI segment. So all of that is going to come in handy. But one thing important that happens in all these management exits is that once, there is a peer group, I don't know how this new person is. Is he leaps and bounds ahead of the others, head and shoulder above others, in which case it becomes a very easy transition because, the peer set doesn't feel threatened and everything falls in place. But sometimes what happens is you might have 2-3 other exits because one of the peers has got elevated, and that becomes a difficult situation because then you have to find the next replacement and the next replacement and the next replacement. Then for the entire team to come together, it'll take a little time to consolidate the leadership position and then simultaneously to go out in the market and win deals, because as times get tough, the competition intensity will obviously go up. Everybody will be under pressure and you need your best people out there. So that might put the company on a back foot, but I don't think we should overemphasize that also. Right. So far, so good, and I'm sure they will navigate it well. And most of the brokerages houses also don't seem to be absolutely, negative about this thing. But there will be some overhang on the stock. We cannot rule that out at all. Right. But I think a quarter or two it'll take to settle down, and then we should be okay.
You know, the good thing is that he's agreed to stay on till September to let the transition happen on a... and you mentioned that, you know, we may see an impact on the stock, at least a sentimental impact on the stock in today's session.
Yes.
Well, with that, thanks a lot for taking out time, ML, and putting things into perspective for us.
Thank you, Dandita.
Well, let's also shift focus to the crude markets then. Joining me this morning is David Lennox of Fat Profits. Good morning, David. Thanks a lot for taking out time and joining us this morning. You know, crude prices did hit a 15-month low. In fact, the Brent prices went below that $75 mark. But yesterday, there was a reprieve as prices have snapped a 3-day losing streak, right? There are reports that Saudi and Russia have had a meeting to calm the markets. Where do you expect crude prices to head from here? Do you expect more downside to come in? As you know, is this the meeting between the two countries? Do you think that's a very temporary reprieve, or do you expect the prices to move higher from here?
Oh, good morning. Certainly, no doubt. You saw the reaction in the oil market as soon as there was a whiff that OPEC was, or members of OPEC were meeting to perhaps discuss production, and you've seen that reaction in the oil price immediately, with it turning around from its downward trend. One would have to suspect that we will need to really see some insertive action from OPEC before we do see perhaps the end of what we've considered as being quite a rout in the oil market. And that's come about because of the destruction in demand that's being seen, with the instability that's being seen inside the banking system and the rippling effect that may have across the broader economy. And also throw in the fact that we still have central banks around the world, and you just mentioned the ECB lifting its rate by 0.5%, trying to slow economies. So they're all leading to destruction of demand, and really the oil price just couldn't, I guess, stand in the way of that destruction, and we saw the falls. But there is a silver lining, and that silver lining was the talk that Russia and the Saudis are out chatting about production. If that does come about, we would need to see quite deep cuts in production, and that will probably stabilise the oil prices around about where they are now, with the ability to push them higher with those cuts actually being implemented.
Right. I also want to talk to you about how the demand is expected to pan out, especially in light of China reopening. When do you see demand pick up, since the Chinese economy has reopened after, years of lockdown?
Look, there's no doubt about it. We did start to see some pickup in demand, and we did start to see certainly a better base for the oil price going forward. But it has unfortunately taken the SVB crisis and the financial crisis to change that quite quickly. One would expect, given that China is a significant consumer of oil, that as we see that country move further and further away from its zero COVID policy, and that has become more and more normalised, as we've seen across those countries that have gone well before it, then we would expect to see a significant uplift in demand. It has happened right throughout. When we saw COVID countries opening, there was an uplift in demand that caught markets by surprise, and we saw oil prices surge. Now we're well expected that will happen with China, so there is some preparation for it. But with China continuing to open, one would expect that we will see demand continue to rise once we've got through this financial crisis in terms of the banking system and the fears that that may cause deeper damage to the broader economy.
Right. David, where do you see oil prices settling in over the next 3 to 4 months? Do you think $80 is a reasonable expectation, or do you expect it to head higher to 85 or remain in this range of $75 to $85?
But really, one will be pretty brave to make a call on where the prices are going. If we do see significant cuts coming out of OPEC, they can get their act together, then one would expect to see the oil prices moving very quickly, as we saw the reaction with them just talking, very quickly back into the probably higher 80s than we see at the moment. If the cuts are neither here nor there, or a bit wishy-washy, then we'd expect to see perhaps $85 challenge, but not much more. If there's no cuts at all, then one would expect to see the oil price, unfortunately, with the malaise and mayhem that we're seeing in the financial sectors, we'd expect to see the oil price perhaps continue on its downward trend and really start to checker in on some of those lower numbers that we haven't seen for some time.
Right, David, we're running out of time. I would like to have a longer conversation with you sometime soon. But thanks a lot for taking out time and joining us this morning and sharing your thoughts with us.
Thank you.
Well, let's now shift focus to market technicals. Joining us now is Kunal Shah of LKP Securities. Good morning, Kunal, and thank you for waiting patiently for us. Well, this morning we are getting very solid cues from SGX Nifty. But, you know, given the fact that we've seen that markets generally tend to open strong, but by the end of the day, they manage to give up all the gains and end either flat or in the red zone. How would you expect the markets to behave in today's session?
Good morning, Nandita. I think exactly as you said that whatever gap ups we get, we have been sold down into, and 17,200 continues to be a strong resistance for Nifty. So since today we are opening a gap up by almost 100 plus points, we are still not going to cross that 17,200 mark. So actually I'll wait for that stability to come in. If we sustain above that 17,200 mark, then probably we'll see further rally on the upside. But if in the opening session in the first 15 minutes, if 17,200 is not held, expect again the market to slide down towards that 17,000, 16,950 mark. So probably the view is range bound. I'm not expecting a big move in today's trading session. We might again find some hurdle at 17,200. Only a sustained move above it will lead to some short covering. Similarly, the view stands for the Bank Nifty index as well. Whenever we have tried to surpass that 40,000 mark, we have seen selling pressure again. So today, if we sustain above that 40,000 mark, then we can expect some short covering on the upside. If that is not held, again expect that correction to go towards that 39,000, 38,800 zone. So probably it will be a trader's market where you will get opportunities on both the side, buy and the sell side. Utilize that opportunity to trade in the market.
Right. I also want to get in your thoughts on the IT pack. We're also getting queries on Infosys. Rishi Ranjan wants to know your thoughts on that company. But given the fact that there has been a news development in TCS, how do you expect the IT pack to pan out in today's session?
If I talk about the IT as a space, I think it's going to be a range bound for the next 2 to 3 months. IT is trying to form a base at the lower levels, but still there is no confirmation. So I might expect this sideways consolidation to go on for the next 2 to 3 months. Specifically, if I talk about Infosys, the chart doesn't look very attractive. It is trading in a lower high, lower low formations on the technical chart. So I will not be a buyer at this point of time. The next support on the downside for Infosys, which comes at the around of 1350. So probably 1350 around zone could be a very good level in order to initiate a buy. We can expect some rally towards 1450, 1500 if that support is held. And similarly, if I talk about TCS, again, it's trading in a sideways trend. I'm not expecting major downside or major upside on the chart perspective. We might see this consolidation in the entire IT space for the next 2 to 3 months.
Right. I just want to mention at this juncture that TCS presser is going on where the top management is laying out the plan for the next few coming months, given the fact that CEO Rajesh Gopinathan will be handing over the reins in September later this year. Moving on then, let's take up the next query that's coming in on the Adani group of stocks. Like every day we are getting queries on Adani group, given the fact that this entire group of stocks has been extremely volatile given the news flow. Now, we have a query where the viewer is asking on Adani Transmission and Adani Power. What are the kind of levels you'll be watching out for in these counters, and would you say that this is the right time to enter into any of these counters?
So see, if we talk about the Adani and Adani group, I think the volatility is likely to be there going forward as well. It's going to be very difficult to track it on the chart perspective as well. Specifically, if I talk on Adani Transmission, I think we have seen a brutal selling from almost 4,000 levels to the level of 1,000. So the stock has almost come down by 4 times, which is a very, very big negative. So on the chart perspective, I don't see any major uptrend or downtrend from the current levels. Since we are trading in an oversold territory on the technical charts, we might expect some technical bounce. So for me, if you want to trade in Adani, you have to trade with proper risk management. stop loss is a must in this place. So for Adani Transmission, if you want to initiate a long position, 850 should be a stop loss on the downside, and I'm expecting some targets of 1100 to 1200 on the upside. So whether it's Adani Transmission or whether it's an Adani Power, I think volatility is likely to be there. Kindly trade with strict stop losses either on the buy side or the sell side. And since we have talked about Adani as a group, I think one stock which I would like to highlight is Adani Ports. Adani Ports is looking very strong on the chart perspective. I think one could initiate a long position at the current level. The risk to reward ratio is also favorable. Currently it's trading around 680. 650 should be a good support for the stock. We can expect levels of 710 on the upside.
Right, so those are the levels to watch out for on Adani Ports. Let's also shift focus to the fertilizer pack. There's a query coming in on GNFC, and Prabhu has written in. He wants to know that he's bought shares at the rate of 655, and he wants to know if this is the right time to average it. But he's ready to wait for another 10 years. Given the fact that the shares are somewhere around the 520 zone right now, close to the 52-week lows. Would you advise him to hold on to it because his time horizon is pretty long?
See, I think if we talk about the stock in the last at least 3 to 4 months, we have seen some selling pressure from the higher levels. Now, in the last 1 month or so specifically, the stock is trying to form a base at a lower level. We are seeing some bullish formations on the lower front, but there is no follow-up move that is coming in. So I think I'll wait for the fresh entry or probably averaging out at the current levels. Whatever quantity is currently holding, I'll suggest him to hold on to that quantity. If the stock breaks below 510, then I would say that you should exit your positions, because after that we'll see some further selling pressure. And if one wants to average it out, I think the level is 535. Once it crosses above those levels, then the confirmation would be in place. Then probably he can add on to your positions at the current levels.
Right. Let's also take up a query on the entire paints basket. Berger and Asian Paints, they have been beneficiaries of the cool-off in crude prices, and they have been rising in a falling market. What kind of advice would you give on some of these paint companies, especially Asian Paints? This query has come in from Gaurav Sharma.
I think definitely crude, where we have seen a massive correction, will benefit the paint companies, and even on the technical chart that is clearly visible. Asian Paint has formed a good support on the lower end, where now as long as the stock stays above 2750, it remains in a bullish trend. Yesterday we got a minor breakout on the intraday chart perspective as well. I am expecting the stock to at least go on the higher side toward the levels of 2970. So one should remain long at the current levels on Asian Paint.
Right. Kunal, I also want to get in your thoughts on Paytm. A lot of these mutual funds have turned buyers into Paytm, and in fact we have a query coming in from Gopalakrishna, and he wants to know a 3-year view on Paytm. Given the fact that the management had also indicated that it's actually already turned EBITDA positive, but they are well on way to the path of profitability as well. So from a 3-year perspective, how should one play this stock?
Yeah, I think definitely what the stock had listed around the levels of 2000, and now it is trading around 570 zone. I think definitely it's now has entered into a buy zone category. Even on the technical charts, it has been forming a base at the lower levels. Now the problem with Paytm is that we had seen 5 weeks back a very bullish candle on the technical charts, but post that we have not seen a follow-up buying. So I will actually wait for the stock to initiate a buy trigger for me, and my buy level will come above the level of 630. So once it crosses 630, I'll get a confirmation on the technical charts that the buy has been activated, and then probably you can hold on for targets of 1000, 1200 on the upside. So it's still in a wait and watch situation. But even if someone wants to start accumulating at the current levels, one can definitely initiate that.
Right. So that's the call on Paytm. Let's focus in on the next query then. This one is coming in on HDFC Bank. Debabrata Mohanta has written in, and he wants to know your thoughts on this counter. Now, over the last 1 month, the stock is down somewhere around 6.5%. But among the other peers like IndusInd Bank and ICICI Bank, how would you view this one, and what are the levels that you would be watching out for over the next 3 to 6 months on this one?
If we talk about HDFC Bank, with the recent correction what we had in Bank Nifty, one of the major leaders for the fall was HDFC Bank. Now, if we expect this pullback rally, the overall trend for the market, the broader trend still remains negative. But since we have witnessed massive correction and we are in an oversold territory, a pullback rally cannot be ignored from the current level. And if that plays out, that means Nifty sustains above that 17,200 mark and Bank Nifty crosses that 40,000 mark, we can expect the pullback recovery in HDFC Bank as well. Now, HDFC Bank is trading at a very critical support zone of 1530. 1530 has been a support zone from where the stock had witnessed bounces from the earlier times as well. And we have again come back to the same level. So probably one should look at the Bank Nifty rather than HDFC Bank. So if Bank Nifty sustains above that 40,000 mark, one could initiate long positions in HDFC Bank as well. 1530 should be a stop loss. We can expect this pullback rally to go towards 1600, 1620 kind of a zone on the upside.
Right, I also want to get in your thoughts on Motherson. Yesterday the stock was down 10% given the block deal in the counter. Promoters have exited, sold some 3.4% stake in the company. Do you expect some kind of upside to come in now? Is this the right time to buy into that one?
See, overall, if I look at the chart perspective, it has given a rising trendline breakdown in yesterday's trading session. But as we said, this was a block deal, so we cannot consider that. So probably I will wait for the stock to come on the upside toward the levels of 70 to 73. If that level is crossed, then probably, and if it sustains above those levels, then probably we can start accumulating Motherson Sumi. But at the current levels, I would say avoid.
Right, I think we just about have time for one more query on the show. This one is coming in from Deepshikha, and she has a query on Andhra Petro. In fact, she holds the stocks at a price of 135. She's making losses, so she wants to know if she should exit or hold on to it.
So definitely, if I talk about Andhra Petro, the stock has been trading in a sharp downtrend. There is a lower high, lower low formations which is intact. And since Andhra Petro, she has been holding, I think it is trying to form a support around the levels of 49.50. So two things she can do from here. Either if 48 is breached on the downside, exit your position, or else if we see any pullback recovery on the upside, my existing point would be 62. So if we have a pullback rally from the current level, since market is turning positive in today's trading session, if that recovery comes in, then 62 again would be an ideal level to exit. If not, then 48 should be a stop loss on the downside.
Right. Well, this wraps up our query segment for today. But Kunal, before I let you go, leave us with some stock recommendations for today.
As we said, that the market is looking for a recovery. 40,000 is a key level for Bank Nifty to watch out for. One sector I'm bullish on the banking space is the PSU bank space. And PSU banks have found support near its previous swing low. And from that pick, my top pick from the PSU space would be SBI. SBI on the technical charts has found a good support around the zone of 510, 515. Whenever the stock has touched this level, it has seen some recovery from those levels. So I'm expecting this recovery to continue on the upside for the stock towards 545, 550 zone. Currently, it's trading somewhere around 528, 530 zone. So probably a more 3 to 4% upside can be seen. One can place a stop loss on the downside at 510. So SBI would be my first pick on the buy side. The second buy pick for me would be from the pharma space. Even if you look at the last 1 to 2 trading sessions when the market was correcting, it was pharma which was showing some buying interest from the current levels. And the top pick from that space would be Zydus Life. Zydus Life, if you look at the chart, even in this volatile market, it was consolidating in a broad range. Yesterday, the stock has given us a breakout from this sideways trend with volumes. One can buy at the current levels. Currently, it's trading somewhere around 480. 460 should be a stop loss on the downside. I'm expecting targets of 505 to 512 on the upside.
Well, so SBI and Zydus Life are two of the recommendations coming in from Kunal. Well, with that, Kunal, thanks a lot for taking out time and joining us this morning and getting all our viewer queries addressed on the show. Well, with that, we are completely timed out on this edition of Morning Trade, but don't go anywhere because coming up next is Opening Bell.